Welcome everybody to Markonomics 101 presents Hoot Loot, the place where you come to be informed, be amused, but never be misled. And far be it from us to mislead you today at a very critical juncture in the market. We have so much to talk about. I am here in the beautiful island state of Hawaii because we're going to talk about surfing the waves. That is the title of today's show, Surfing the Waves, because what you really want to do here is make sure you pointed your surfboard in the right direction. And it's a matter of either riding the wave or being blown away by the wave. And we don't want you to be blown away by the wave. We want you to ride the wave because you ride it to safety, whereas it's going to just tsunami everybody else out. So with that, please like and subscribe down here on the sand. And we're about to come back. Cowabunga, baby! The chart's in just a second. All right, welcome back, everybody. We're going to talk about some really interesting developments going on here. Some good, some bad, but everything you can do something about. So we're leading off today's show with Tesla, the first of two canaries in the coal mine. And plus, also my good friend Elon Musk is going to be on Saturday Night Live tonight. I did a little bit of research on Mars, and I think Elon has got to be asked some questions. Of course, nobody's asking him these questions, but... I won't even go into it, but I'm going to tell you this. He is no rocket man, I don't think, but we'll see how he does tonight. He's been pumping up all that cryptocurrency stuff, and now he's backing away from it. Who knows what he'll say tonight. But Tesla right here does not look good. Notice it is in a bear flag. We've talked about it. It's a canary in a coal mine. It's just about to break the lower bound, and actually it did very badly last week. In a week where most things went up, it went down, and it looks like it's about to break its flag and start a new leg down. So with that, we move on, and that's part of the overvaluation theme. There's really three themes, three waves that we're going to talk about today: inflation, interest rates, and overvaluation / overspeculation. So we're going to talk about those three, how to surf those waves, not get blown away by them, okay? So Bitcoin is one of those waves. This falls under overvaluation, overspeculation. Notice, though, that Bitcoin has recovered a little bit. It's looking okay, while some of the other cryptos are making new highs. But it's formed an ascending wedge, a very short-term one, but we would expect that this thing will probably break down, and probably sooner rather than later. The Dow Jones Industrial Average continues to kind of just ascend and ascend and ascend and ascend in a wave, in an ascending wedge. And I think, I keep thinking this one's cooked, but every time I do, it keeps going a little higher. So, we're seeing another wave here, and the other wave is more like an economic bottleneck growth wave, but there's not much to invest in around that. It's just more something to be aware of so that you don't become a victim to some of the bottlenecks and mismanagement of the economy, which is going to be felt here pretty soon. The NASDAQ 100, again, just kind of an ascending wedge, barely making new highs. We're going to show you some of the companies that are the dominant companies in market cap and how they've started to turn over, how they don't look good, and how they're going to lead the market lower, we believe. The S&P 500 also continues, I call it a terminal ascending wedge, but it never seems to be terminal, it keeps going. The small caps look like they're in a bear flag, and what we're starting to see in the small caps is they're starting to underperform everything else dramatically. It's really the banks and a few other sectors, sort of the construction and infrastructure boom type of companies are getting money thrown at them. No, they're still doing okay. The Dow Jones Transportation Index, now this is kind of interesting. I've given this a lot of thought, and what's amazing to me is that the cost of transportation, keeps going up, but the services of transportation companies, especially those that are shipping goods around, has become vital to the economy. We're going to see that in a minute, how inflation is actually helping them. U.S. dollar is starting to break down again. I mean, notice on Friday it actually broke through its support. The dollar is not headed to good places, and with it, a lot of people are not headed to good places. Don't let this wave splash you over, okay? CRB index, this is the granddaddy of commodities indexes. This shows you inflation, inflation, inflation. What can I say? Even today, some landlords came out and started raising rents, fairly large ones, 11%. Everything is going up like crazy. The only people that don't see it are the Biden administration and Jay Powell. Everybody else sees it. Janet Yellen occasionally sees it, occasionally doesn't. Depends on who she's talking to. Lumber. Here's another one. We've actually talked about this in the past. Here's a real chart. Look at this thing, up 500% this year on the last 6 months. No wonder home prices are now unaffordable to anybody. Is because of the lumber cost. Look at that. This thing has gone like parabolic. And this is largely because of the fact that the ability to transport through bottlenecks has become a problem. Not only is the supply a problem, but the ability to get them to where they need to be gotten to, the logistics are turning out to be a nightmare. This is everywhere. This isn't just ports, this is everywhere. Copper miners, speaking of home builders, this is thought, now I don't know that this is necessarily going to do this, but right now copper's at a brand new all-time high, as is lumber, and so the cost of the home that you own is going through the roof simply because of the inventory you hold. Think about how much all that wood is worth. Think about how much all that copper is worth. It's enough to make the Sopranos want to go in there and kind of take the place apart. So crude oil also heading up, not as fast though. And this one continues to look to me like it's just really a reaction to a lower dollar. Any hard good right now that's priced in dollars is advancing against the dollar. Think about every good as being an exchange between the dollar and itself. Like Bitcoin is just a speculation on the dollar. That's all it is. Because all you could do is take Bitcoin, turn them into dollars, take dollars, turn them into Bitcoin. So all you can do is speculate on the dollar, and that's really all that it's good for, because it's not good for e-commerce. No one's using it for that. Unleaded gasoline, also same thing. Looks like it's heading up. We'll see. Agriculture, here's the problem. Here is the biggest problem. Food prices. They have gone up at the highest rate in almost recorded history, last 50 years. 1976, I believe, was a bigger commodities type of boom. At least it was toward the end of the year, but 1976 and toward the late 70s, you had inflation roaring at 12, 13, 14%. That was before the CPI got revised a couple times, so that it was more accurate. Okay. Base metals, this includes now steel you can't get, tin you can't get anything. I mean, look at this thing. Even change. I said this a few weeks ago. If you want to buy a nickel, it'll cost you 25 cents because there's 25 cents worth of nickel in a nickel. So that's why you can't get anything in change anymore. Paper, you can get all you want. Now the toilet paper is available, you can use the dollar for that eventually. Gold, now we've had an interesting breakout here. I'd almost given up on gold after pounding the table for so long, and it looks like we've had a breakout. So we're going to follow this. It's still early. I don't want to get, we've had a lot of false breakouts in this thing, and so we're going to monitor it. But here's what I wanted to show you on this chart is that if the rule of thumb applies, that the prior move is then repeated in a succeeding move after breaking out of a bull flag, that would take us from about 1,700, and the last move saw 900 points. It went from 1,200 to 2,100, so we'd say 1,700 plus 900 roughly. That would be a 2,600 target for gold over the next several months. And that means that you can kind of take your time and not get position yourself right. We'll comment on that on Wednesday. As a matter of fact, I think it'd be a good time for us to bring up some gold miners again. Silver kind of going sideways again. Little bit of underperformance. It didn't break out. But again, silver has gone in. This looks to me like a bull flag. And with all the dollars being printed, I mean, how can silver not go up? How can gold not go up? A lot. Palladium, same thing, another metal. We've talked about that one. Here's platinum. Again, another metal. Anything that's metal is going completely crazy and going completely nuts. Now we're going to switch gears for a second and start talking about the economy and interest rates. On Friday, the jobs report, which is the number of jobs added to the economy, was released by the Bureau of Labor Statistics. Everybody thought 1 million jobs were going to be created. That was the sort of the spread, the beat the spread number. Turned out 266,000 were created, and lo and behold, a couple of governors and the Chamber of Commerce suddenly learned an economics lesson right from Markonomics 101, something we've talked about. How can you add a lot of workers when you're paying them too much to not work? Duh! It's about freaking time these people figured it out. Well, in any event, now people are starting to call for, an easement of federal supplemental unemployment insurance. So 2 states have rejected it. 2 states have stopped paying benefits, apparently, and but they still have to buy a stipend to get people to give up their entitlement. That is how entrenched we are with these entitlement programs. You have to pay people to take them back from them, because once you give them to them, try getting them back. Even if the country can't afford it, and we're seeing hyperinflation as a result because of these stupid policies, that's kind of what happens. Now on Friday, the reason I'm bringing all this background up is because this was very foreseeable. And what you saw on Friday was initially the thought that the economy wasn't that strong. Well, that's not really the case. And the economy, so what happened is you had a dive under the blue line, and then all of a sudden a rally back really sharply. This is the sign. This is we're going to show this on the 30-year in a second here. The 30-year, we had what's called an outside day reversal. An outside day is like a 1-day chart pattern or 2-day chart pattern where the second day has a higher high and a lower low than the prior day. So in other words, one bar looks like this, the other bar looks like this, starts down here, closes up here, and that's usually a very powerful reversal. We had that in the 30-year called an outside day, and usually in the middle of a bull market, that's exactly what you're going to see, long-term bull market. That's one of the ways you know that this is a wave, because the minute these bonds broke down for even a second, buyers just jumped right in and got it, and this thing is likely to have another run here because it is so low by comparison to the rates of inflation that that we're seeing indicated. Now here's something interesting. We've never actually talked about these. These are called TIPS, or Treasury Inflation Protected Securities. These actually measure inflation from a market standpoint, and when the principal rises, it means that inflationary expectations are more. If you hold these, you either get the principal or 100, whichever is greater, and you get an adjustment over inflation in a coupon, and then you get the principals adjusted by inflation. So in other words, if inflation is going up, then the principal of this bond will go up, and vice versa. So this is a good market indicator that inflationary expectations are getting pretty high. These are investment grade corporates. This looks like it broke down an ascending wedge and is probably headed lower. These are basically what banks own. They own high level type bank loans, and this is representative of it. The 20+ year treasuries, the ProShares Ultra Short, this is in a descending wedge, a bullish pattern. Also had an outside day reversal, but that's what you'd expect because the long bond did. And this looks like it's heading probably up to new highs. So we'll see about that, and I think it might happen as early as Monday. We'll see about it. Now, I want to start showing you, while I'm flipping around the charts here, I'm going to show you some of the big mega cap companies, and we're going to take a look at them chart-wise from 1 year time frame to a 5-year time frame. So what we're going to do is we're going to zoom out, and we're going to look at a much lower magnification as if we're 50,000 foot level and see what else they tell us. Now this is Apple. We've shown this before. It has not behaved well. It started to curl over. Notice even on Friday with an up day, it was basically selling off all day. It opened up and sold off. That is not a good sign. That is a sign that the wave of overvaluation has crested and that you're going to get less overvaluation, less overspeculation. This is one of the signs of it, that's a wave. This is 5 years. Now, if you look at that bear flag, it basically encompasses the entire last year. So if you look at this thing and look how far down it could go, the next level of support is at like $90. So Apple could have potentially a long way to go down, and also with the with inflation going up and driving multiples down, I would say that it could easily happen here. Amazon too. We've shown this chart. It's in sort of a sideways consolidation, but I really want to compare this to the 5-year and look at that. The 5-year is just, Amazon's next level of support is really down around like 2,000. So this one also could conceivably come down. We'll see about that, but it's not behaving very well right now. And they've got a hell of a logistics problem themselves. How did they get all these deliveries out? That's got to be really tough. Oops. Facebook, the stock I love to hate, the guy I love to hate. I got to be honest here. I got some issues with this company. Facebook and the other companies, Instagram and WhatsApp, they have become basically breeding grounds for scammers. Mark Zuckerberg, who is the most sanctimonious CEO I've ever seen in my life, talks about free speech and all that. He is the biggest censor there is, number one. Number two, he also, now, if you commit an actual federal violation on Facebook, like try to steal someone's identity? He doesn't care. He could care less about it. Go ahead and call customer service if you care. But if you say something that isn't his opinion, he's going to get his fact checkers all over you. So with that, I got my little rant out of the way, and Facebook still looks good, and yeah, to that. All right, Microsoft. Again, this one is curling over in an ascending flag. I want to compare it because I've shown that weekly 5 years. It's in a large, long ascending wedge. And what you can draw out of this is that that is basically a long pattern, and it's going to take many years for this thing to work this off. So, keep in mind here that we are cresting in a wave of what is, the last wave was almost 12-year bull market. That's a hell of a wave. We're cresting that wave right now. So as it's confusing in that, there are cross currents going on, but basically keep your eye on the big picture, surf the wave. If you surf the wave, you'll come out just fine. Netflix, now this one looks like, it's sort of just stuck in a trading range all year, but now compare it to Netflix of 5 years, and you see that Netflix is also in a bear flag. Netflix can also come down quite a bit, and Netflix has been in a long-term, bull market. And I just want to show this so you have a sense of where this thing could actually go before finding support. Oops. All right, Qualcomm, a chip maker, there are chip shortages all over. What a surprise! Bottleneck shortages, and no one's, people are making money off of it, and we're about to tell you why in a minute. The bank index, now this one is broken out to new highs here. And if you look at the bank index, it also had an outside day on the last, trading day. I didn't circle it, but what's interesting is that it is actually reflecting interest rate expectations. In other words, as interest rates go higher, the bank index seems to go higher. I'm finding that a little strange right now, but that is exactly what's happening, and banks are actually a good indicator right now in the near term of where interest rates are going to go. The broker-dealer index meandering in an ascending wedge. I guess there's just not enough deals to go around yet, or any bottlenecks. The airline index, I don't believe this one. This one is actually breaking up. I don't know. It looks like it's actually breaking up, and there's no good reason why this should happen. I can't think of a single one, but nonetheless, I wouldn't want to be short this thing right here, right now. The big oil index, here's another reason to think why oil prices are probably heading higher, and that's that the stocks are heading higher. They look like they were in kind of a head and shoulders, maybe breaking down, but no, not anymore. They're surging to new highs. All the mega cap big oil companies are doing that, and that is absolutely underpinning the market. Now, a lot of people are asking about real estate. Is real estate in a bubble? Well, I would say that it's not, and the reason I'm going to tell you it's not is because it is also a hard asset reacting to the plunge in the dollar, and landlords are raising rent. So if landlords are raising rent, okay, then the value of real estate has to go up because the cash flows from it have gone up. Or owning a place, the imputed rent has gone up. So what you avoid paying by virtue of owning a home has also gone up. So occupancy costs are going up. Jay Powell, you listening? I don't know. We'll see. But suffice it to say, real estate is reacting to the commodity cycle much more than it's in a bubble or speculative bubble. It is not. It is supported by all these other weird cross currents. Home builders, look at this. I mean, this thing is going to make homes are going to be unaffordable again very soon if they're not already. And home builders, if they're not able to complete their projects because they're not getting, building materials in time, we're going to end up with a lot of, surplus and vacant places. Healthcare, always a good thing in an aging population to have some exposure to healthcare. This thing never goes down practically. It might someday. We'll see. American Express, credit card company, and here we go, breakout again, and this thing is just following interest rates all the way. Same with JP Morgan. Again, we had an outside day, and so the bank index did, JP Morgan did, and it looks like it's probably heading to new highs one more time. Costco. Okay, this is where the stimulus checks come into play. I'm sorry about that. I have to okay. My shrink says I've got to cut out the caffeine in the morning because I get too excitable about stimulus checks. Okay, never mind. Okay, so Costco has actually gone up to a new high. Look at that plunge, comes right back, and they actually, speaking of inflation, they had something called shrinkflation, where they didn't actually announce price increases, but they reduced the packaging size of everything. So now your box of cereal that used to be, 12 ounces is now 4 ounces and costs the same, and you're supposed to not notice the difference. CVS Health. Now, here's something where we're gonna start talking about what seems to be going on here. Why would CVS Health all of a sudden just leap like this, or Costco leap like this? And here's the answer I come up with, the answer that I believe to be the case. Right now, wages are not going up. There's a report that, workers are hard to come by. Well, yeah, that's because they're being paid too much not to work. Well, so what happens is there's no expectation, and the Fed has been so proud of themselves. There's no inflation here because wages would be going up. So in other words, the reason CVS is making more money is because they can pass on their prices to you, but they don't have to pass on anything to the people that work for them. So they have higher profit margins. Isn't that great? We get to take more from the poor downtrodden worker and make higher profits. And the Fed is so far behind it. The administration is behind it. Nancy Pelosi is behind it. She wants to have more stimulus because we don't have enough. That's why the jobs report didn't come out. And unfortunately, part of the reason that the jobs report was so bad was because of the stimulus and the inflation and the bottlenecks and the fact that people are spending money on goods that don't exist. So if you give people more money, you have to find a way for some of that to be produced, or they're going to buy it offshore, and they're going to create bottlenecks. That's what's happening right now, and it is a bigger problem than any of you probably have heard at this point. Discover Financial, another credit card company, new highs. MasterCard broke down, but this one, again, I'm not sure that this is something that we can actually consider to be permanent. Target still doing well, still making new highs. Again, retailers, I believe very much so, are going up because they can pass along all the price increases they've gotten, but they don't have to pay their employees anymore. So if you're like a really ambitious politician right now, and you're in Congress, and you want something to run on in 2022, how about a $30 an hour minimum wage? Okay, there you go. Because pretty soon the reason you can't get people at $15 an hour is because it doesn't buy anything. Okay, there you go. FedEx. Now these guys also, higher profit margins because they can pass on costs. They are critical to the supply chain right now. Walmart, for example, has told, Walmart works with a company called Cisco, which is a wholesale food company that provides, wholesale foods to restaurants and also to, bigger retailers like Walmart. Well, they're running out of everything. And they're telling their supply chain people, produce or else. The problem is, it's out of a lot of people's control. They're getting regulations, they're getting mask regulations, that regulations, and it makes it burdensome to get back to work and unleash the power in this economy because we're strangling it with stupid things like stimulus tax that I don't get. Okay? Enough said. Thank you. I feel so much better after that. Okay. UPS, same thing. Higher profit margins, and basically they are now critical to getting this economy up and running. Home Depot, another one. Because of all the shortages, there's also another thing I wanted to mention, which is occurring, and I think may be a factor. Inventory profits. If you hold a bunch of copper, you hold a bunch of plywood in inventory, look how much money you've made just holding it in inventory. If you bought it a year ago at $200 for plywood or whatever, and now all of a sudden it's selling you $1,600, you've made that. Now in the 70s that used to happen. They created something called first in, first out accounting and last in, first out accounting, so that they took out the inflation adjustments, the inflation gains. But that was one of the big factors in the 70s that made the informational content of any kind of an earnings report just horrible, like they are today. Anyway, nothing's changed there. Dow Holdings, again, infrastructure company, looking really good, healthy uptrend. And here's Stellantis now. Isn't this interesting? It broke down from an ascending wedge, and all of a sudden it's broken higher from an ascending wedge. So, this says, again, kind of bull market still, that there's still some growth out there, or there's some expectation of growth. It's not just going to turn around tomorrow. And we may see the economy kind of chug along with shortages and the appearance that it's strong, but it's really not strong if nobody's producing anything. It just means that we're paying more for things. 3M company, also same kind of thing, broke down. An ascending wedge now made a new high. So again, that is a hint that this is a theme, this is a wave. You got to surf this wave, not fight this wave, and that's one of them is infrastructure spending on some of these domestic companies. And finally, we have Caterpillar Tractor, same kind of thing, infrastructure spending, and that's driving things up. I'm going to have some final comments in a minute. Thank you all for tuning in. We'll be right back. Welcome back, everybody. Cowabunga. Hope you've enjoyed today's program. No surprises today. We'll see you on Wednesday.